Good morning, folks. Good. Whoa. Sorry about that. All right, everybody. How's everybody doing? Good to see everybody. Oh, man. All right. So today we're going to do a little bit of a health check. What's the state of the market? What's the state of crypto? And do a little Q&A here. Just trying to get back in the groove. I was out all last week. Didn't watch the market the whole, which is probably a good thing. Let's see here. I kind of took off. I was pretty much out of commission from the 19th through the 26th. What did the market do from the 19th to the 26th? A whole lot of nothing. From the 19th to today, the market has gone totally sideways. Since I left, the time I'm back, we've done a whole lot of nothing. A little bit of wiggling around here. So, wondering how much risk you think is involved in Eagle Mex liquidity farming on Myar. All right, Maverick, that's a good question. Let me field that question up front here. So I've been farming. Let's go find the Eagle chart. I've been farming Mex on Eagle. Here's the thing. Here's what I did. Is I looked at all the strategies that there were about, the high yield farming that was going to be coming out on Mex, and I came to the conclusion that I wanted exposure to, and I wanted to farm with all the really high APR. I wanted to farm some free locked Mex for down the road as an asymmetric bet, but I didn't want to put a ton into it. So what I did is day one, when we opened up, I actually had planned to do 10% of my entire E-Gold stack. I basically, I bought a little more E-Gold right ahead of launch. So over here, I bought some E-Gold as we were breaking out over here. And I decided, you know what, I'm going to use that E-Gold I'm going to leave the rest of it just staked. I had staked some, unstaked some, but bought a little more before launch. And I was going to take 30% of all my E-Gold and sell, immediately sell at least 10% of it to go to Mex to start farming. But with all the issues when it very first rolled out, it was, the price of Mex shot up from like 0.0002 to 10 in no time flat, at 5x, by the time I could get in and log in, it was up over 10. So I said, you know what, I'm going to start with a smaller stack. So I did, I think 5% of my E-Gold. I sold right away and just started farming LK Mex, the locked Mex, right away. So I only used 5%. And then and when E-Gold hit $500, I sold another 5% of my E-Gold, and I bought it back at 400. Once I bought it back at 400, I converted another 5% Mex. I bought the dip Mex on the dip there. And I started, so I've been 90% LK Mex farming still. But I'm starting to switch. So that was what's called the Mexilodon or Megalodon, E-Gold Mango Whale, if you follow him on Twitter. That was his kind of, start farming LK Mex right away and then transition into the Denver strategy, which is a blend of the Denver strategy for farming is 60%, 6% you're farming Mex tokens, the unlocked Mex tokens, and 33% you're farming the locked Mex tokens. And the idea is that what you do is you sell the Mex tokens. You sell half of them. You keep them. I think you sell half of them, or you sell them. I don't know if it's half of them. I haven't got that far yet in the strategy. But you sell these. You convert these to E-Gold as needed, basically, to keep then pairing that E-Gold with the LK Mex to continue farming to increase your LK Mex base. So I'm transitioning from 100% LK Mex currently. I'm almost burned up. So the entire stack that I had, my 30%, with my 10% initial investment roughly of my E-Gold into Mex, I now have more LK Mex than I do Mex. And once the 20% of E-Gold I had set aside to pair, once that's all burned up and it's paired with LK Mex, then I will transition into this strategy where I'm producing Mex and LK Mex to continue to convert E-Gold. But what I'm going to do is I'm actually going to buy back instead of converting it and continue to farm more LK Mex. I'm going to consider this chunk that I have here, this LK Mex that I farmed this whole time. That's my free ride for the next year. And I'm going to then start converting my MEX back into e-gold until I have my initial stack of e-gold back. And then basically what I have is house money. So my plan is to get to house money as fast as possible. So basically for the first 4 weeks, I had planned to farm as much LK MEX as I possibly could. And then over the next several weeks to then farm MEX and convert that back to e-gold and get my entire e-gold stack back and stake that, and to have a free bag of MEX, combination of MEX and LK MEX tokens. And then I'm going to use the MEX tokens to buy things like Ride and other projects that I like that are coming out, that are launching on the ecosystem. Once I have my original e-gold back, I'll just keep stacking MEX tokens for purchasing. And MEX and e-gold, I'll keep them all in that whole mire. Basically, it'll be a blend of things that's all house money, basically. I'll have my original e-gold back, it'll be staked, and I'll be house money in the MEX farming pools. And I'll use the MEX and e-gold as I deem necessary to buy projects that I want to buy. So that's my current plan. My music stopped, but that's all right. Okay, so that's the plan with that. Why can I not hear anything? Did my headphones die? All right, there we go. My headphones are acting ridiculous. All right, looking like your boy is more and more on the money about ETH all the time. Oh, Alan? Yeah, I think Alan has a really good. I mean, he was a CTO for years, and so he's got a really good understanding of technology and technology adoption. So let's talk about that. That's a part of let's get to the topic we want to get to, is the health of the market. So we see here that Ethereum is breaking out versus Bitcoin. Now, if you guys follow all the Bitcoin 4-year cycle modeling, which by now it should be apparent to you, that's all pretty dead. But if it's not, it's dead. Now, not to say that, well, we'll get to that. The 4-year part of the model, the timing, we're way past like the timing, right? So we should have peaked in September 1st, and then maybe in November, December for the seasonality of Bitcoin. But that's all. I mean, we're obviously haven't peaked, and we're not going to on time for any sort of Gregorian calendar timing. So we'll get into how we might be able to adjust our time frames. But this is way off script, right? Ethereum should not be breaking out versus Bitcoin at this juncture. This should be Bitcoin season. So at this point in time, this is a bit of a red flag. Let me see if I can find a little red flag here. This is one of several red flags we're going to talk about today, where people kind of refuse to believe that things have changed, but things have changed. This is one red flag right here we're going to talk about. The ETH BTC ratio. It's not necessarily bad for crypto. It's just a red flag about what we expect with the whole Bitcoin seasonality, Bitcoin season, the relationship between Bitcoin, large caps, mid caps, and small caps in that typical flow of funds. This is not behaving. The large cap funds, what used to flow to Bitcoin season, seems to be flowing to Ethereum now. So this is a problem for kind of that whole Bitcoin hypothesis. There's a couple reasons for it. But another thing I'm looking at here is Litecoin. So Litecoin continues to, it's really in this downtrend. It hasn't done a massive breakout yet. But when I look at Litecoin USD, it's wanting to break out here versus a little bit. This is our other kind of red flag. I wouldn't say it's a red flag right now, but this price action here was a bit of a red flag, right? When it popped all the way to $300 from this base, which we were expecting. I was expecting that, honestly. But when the bigger problem is that Bitcoin has really done nothing while this happened. So this is a warning sign that we're getting into exhaustion on crypto, and that money is flowing into these smaller caps for some returns, but we're not really getting movement on the big caps, namely Bitcoin, right? Ethereum moving is unexpected at this point. Look at the Ethereum chart here. I have this uptrend channel. This was the last time. If you see one of these big breakouts to the top side of the channel like this is another gigantic potential red flag that, but right now we haven't seen this type of price action, so we're not in super, this is not a big problem at this moment in time. But this starting to show signs of something that could end up being a red flag. Basically, I put it above this little red line here. If we get above this this key level I have, this 0.018 level, that's that swing high over here from May 2018. If we get above that, I'm gonna start to really question some things. Okay, so there's that. Obviously, Bitcoin is not doing what a lot of people thought it would be doing. You know, there's the whole Moonvember. Well, this monthly candle is not looking very moonish to me. So, yeah, this is a indecision, a bit of an exhaustion candle. This is a weird feed I've got here. Let me try to find a better chart. Sorry. All right. And so what I really wanted to highlight was just to keep things very simple. All right, so basically the same thing we did to keep us safe back over here in the springtime. We had these two moving averages, but that candle not looking so hot right now. If we were to close that candle, that's not you know, it's not terrible. It's not the end of the world. It's still, you know, we still made a higher high over here, and it's a higher low. So we're not going to overreact to it just yet, but it's not the candle a lot of people were looking for is the main thing. Now, if you look at, there's a way down on the 4-hour chart. This is the 50-day and the 120-day moving averages, right? And basically, you saw me put on here, you know, a green thumbs up and a red thumbs down. It's really pretty simple. I mean, I think a lot of people are getting knocked around by the market here a little bit, and so what I'm going to do is I'm going to hodl. So I'm back to just hodling. I try to take an entry on this bull flag breakout. What looked like it might have been a bull flag on the potential breakout. I got stopped out below that wick right there, and I've been out since then on leverage. So I'm just chilling with my hodl bag, waiting for a clearer signal. And at this point, I tried that. It didn't work. So now I'm going to wait for the 50-day. I'm going to wait for us to retake and confirm the 50-day. That would be 2 daily closes. A confirmation would be 2 daily closes above, right? Or a breakout, retest, resumption. Those would all be types of confirmations above the 50-day. And it depends on how we close around it, what kind of market structure. The other thing, you know, we've been watching this downtrend structure right here. If by some kind of miracle we get a situation where the 50 curls over and we're still kind of like working on this breakout, that would be a really nice combination. But the 20 is going to come into play there. You see the 20 is hugging this trend line right now, back down. So this might be an early indication, but I'm going to wait for the 50 at this point for leverage trades, right? If we're going to make a big move, it'll be on the upside of the 50. The reason I'm watching the 50 is you see here, I don't know exactly where we're at, but we've fallen below the 50. The last time, let me show you every single time we've fallen below the 50 in the last, you know, since the last little bit here. It was right here, right? And then we came back up to it. You probably got a resumption signal through here, and then you would have been stopped out here. So that's going to be a stop we're going to have to eat if that happens. It's just the name of the game. And then we stayed below the 50 until we got above it right over here. And then we got below the 50 over here. So the 50 can bounce off the 120. You see that happened here, right? We bounced right off the 120. We got pretty close to the 120 here. So we could be kind of experiencing a reaccumulation pattern like what we experienced in September, which would make a little more sense given a lot of things. But this could also be the end of a distribution as well. There are Wyckoff patterns that show, instead of this third high, so there are Wyckoff patterns that show 1, 2, kind of 3 highs, and then it rolls over. There are, I highlighted this in another tweet here with another chart. I have it somewhere. But there are patterns where you don't make that third high. You simply stay below down here. So this doesn't happen. And you just flutter around down here and then eventually roll over. So there is a scenario where we kind of flutter around and then roll over, right? So that's what we're watching for, is signs of that. Now, the reason the key indicators that give us a heads up that we're here or here, there's a couple of things we can be looking at. First is, let's go look at our net transfers here. I'm going to show you the BTC transfers to and from exchange. Let's zoom into 2021 specifically. All right, let's see what happened all throughout 2021. Let's zoom up a little bit more here. So you see in September, rolled over here and made that bottom. we had a day of coins coming onto exchange, and then coins off exchange and coins. So it's pretty neutral with coins coming onto exchange, right? As far as over there, I'm going to zoom in just a little bit more. Scoot it over, okay. So it was fairly neutral. We had some coming in, coming off right through here, but it was, like I said, it was pretty neutral, and then it made this big bounce out of there. Okay, but over here in April and May, you see that in April, as we were coming down here, we had coins coming onto exchange at a pretty strong clip. And then as we made this bounce, we had more coins coming onto exchange than off of exchange. And then especially right here, we had a huge increase as it started to roll over. So what we're watching for here is to see if this pattern of coins coming onto exchange, we've started to see some coins coming onto exchange, more so than we've had since the sell-off back here in spring, right? This has been, let me pull this up on another chart. Here's my exchanges chart, exchange balance percentage. There you go. All right, so you see this little bounce right here? So if we take a look at the behavior, you see this was that low that we put it in September. See how the coins on exchange kind of remained flat? There wasn't a lot of, there was some coming on exchange, but it was more or less flat, right? It was neutral, which is fine. Neutral is fine, and then we bounced. Over here though, we had the sell-off and a big spike of coins onto exchange, and then that more or less kept increasing while price was increasing and struggling to make, it made a lower high, and coins kept coming onto exchange. What we're seeing is the first signs of that behavior. You see the coins coming on net onto exchange here since November 25th. We've had coins come onto exchange the 26th, 27th, 28th, and 29th now. So we'll watch this. If this trend continues and we see something like this where we ultimately put in a lower high and coins keep coming on exchange, the recipe very well may be that we roll over into a prolonged accumulation. But that's what I'm watching for. That's one key indicator. Another key indicator. We talked about ETH. So Ethereum breaking out here is a potential indicator that that we're headed for, maybe some accumulation corrective phase here. Now, what I want to highlight though is we don't have the same downside, in my opinion, that we did over here as far as percentage loss or percentage gain. And the reason is it's just a symmetry thing. Right, so from here, really from this low to this high, we had gained 545%, and then we lost, what was it, 70% or something like that, 50%, whatever it was. Okay, yeah, so 500% up, 50% down. But from this point to this point, we've appreciated 133%. So the downside probably isn't a 50% downside. It's more like a 30% downside. Back to that box that I have here. Let me get rid of those. I have this support box. The reason I have this drawn like I have it is this is where I see the major support and major resistance. So we have resistance still overhead, and I highlighted this before. We actually broke through it, which now it's pretty clear these were false breakouts, and we've come back down below this resistance zone. We have this support zone below us. There is a high probability that we are going to enter this support zone. Right? I know the end of the year prognosticators and the modelers all say that we're going to 300K, but the chart and the price action is telling us that this is the more likely scenario, in my opinion, right now. And that's especially going to be evident if we continue to see coins come onto exchange. Now, if we see a spike in price, some volume and coins coming off of exchange, it's going to change the picture. Here's the other thing: look at volume. And don't look at the absolute values. We're not looking for, okay, volume on 3/8 was higher than it was on this date. We're looking for the trajectory of volume, right? So if you go to 2020, you see as the summer buying is usually kind of low, right? As Wall Street got back to work here in October, and people started noticing the asset, we had this very large increase in volume along with an increase in price. That volume increase started the late September, early October. And the volume was higher in November. Why is this 1206 here? So the volume was higher in November than it was in October. And so September was a little bit lower. October was higher. November was higher. We had a down week when we had that. There was a sell-off at the very end of November into early December. And then we had increasing volume out of all that. December was really high volume. This was to the buy side, right? And this was a big volume spike to the sell side. Okay, so now this is volume by week for the past 2 years, so you can kind of see this kind of clearly. All right, now what do we have? The relative volume, right? So what I'm not talking about was this volume bar higher than this volume bar over here. That's not what we care about, because this is Bitcoin traded volume. So this was lower USD values, so there's going to be more Bitcoin traded. It's the relative trajectory. So we were moving upward, and volume was increasing as the year came to a close in 2020 and into early 2021. Here we see basically flat. Now, you could technically say it's probably actually down. So this is not necessarily healthy, that we had more volume in September. That week in September there, that was a sell-off though, was more volume than anything else we've seen since then. But the volume has been flat. It's maybe slightly declining, but it's more or less flat. Flat volume is not good for price appreciation, right? So it's just a sideways market. Okay. All right. Funding rates. Funding rates right now don't look too crazy. Binance got up to 0.03 the other day, a little bit concerning, but we've had a little sell-off and it cooled off. So funding rates are not doing a whole lot. You can see this here depicted differently on Glassnode. Let's see here if I go to derivatives. Here's our perpetual funding rate. Not looking too bad right now. Okay, so it's not terrible. So that's not a concern at this point in time. It actually went negative there for a while, which is bullish, honestly. So, but we do have some warning signs. So that's things I want to highlight. All right, bull December coming. Good job. So Captain Crypto asked me about RSI. All right, let's talk about the RSI. I know I don't use it. I use my moving averages, right? And I measure separation from moving averages as opposed to RSI. So here's let me just illustrate how I do it. There hasn't been, at this point I started measuring. I was starting to measure, okay, and this is what gave me, like, you see the distance from, what's the sell-off needed to get down to the 120, right? So 12% separation from the 50-day, 27% separation from the 120-day. At the height of this part of the bull market, I think the February peak was pretty much probably the highest separation, 50-something%, right? So 50% separated. That's definitely overheated. It's definitely overheated. Now let's see what it was here. All right, so this is how I judge, how overheated we are. Is how far we are separated from these longer moving averages. And then the 200. I haven't been using the 200 lately because I intend to be out of the market by the time we hit the 200 at this point for tradable positions. So that's how I do it. I don't use the RSI, but let's throw the RSI on here and let's talk about the RSI because I know people do use it. I want this one, sorry. Let's just throw the RSI on here, talk about the history. Now here's the thing, people are going to talk about the history. This is Deribit. Let's go to a longer term chart. Coinbase is good. All right, people are going to talk about the history, what happens when Bitcoin gets oversold or overbought on the RSI, so forth and so on. All right, so the contention is here, I believe, that we reached near oversold territory. I would classify below 30 as oversold. Some people say below 40 is oversold. I don't know. But I guess this is the contention. And then correct me if I'm wrong, Captain Crypto over here on the RSI. You're saying that because we got below the 30, we reached more or less oversold conditions and you're looking for a bounce on the RSI, right? That's what I think he's saying. I would contend that the RSI is on the downside. I was looking at something. I don't think it's as valid as it used to be. Now, the weekly RSI, here's the other thing. Remember we were talking about this? A lot of people have talked about this. And I was tracking this at one point, and I quit. Right? But in 2017, we had these 1, 2, 3, 4, 5, 6 peaks of RSI. And then on the weekly. And then when the bull market really got going late last year, we're like, all right, we've had peak 1, 2... Oh, wait, where'd they go? All right. So here's another indicator. Once we reach, this is a $1 trillion market cap asset, everything has changed since then. Like this behavior of constantly bouncing back to getting down to the mid, about 50 and then bouncing, or 60 and bouncing. All right, we were all looking for a bounce right here. All right, it's coming. The RSI is reset. The RSI is reset. It should be bouncing now right here, and it went the other way. Right, this is a black swan, China banning. Yeah, I get it, but still, this is what happened. And now we've hit resistance. We bounced to 70 and we've come back down here. This is behaving very differently than over here. So it is my contention that, and this is behaving more like 2019, honestly. My contention is that these RSI readings that people have used in prior bull markets is no longer valid because the market has shown us something different, right? And we have to adapt. So the same RSI indicators, so I would, on the daily, let me just wrap up my thoughts there. Unless we get a print below the 20 level, below 30 into the 20s, then I'm not as convinced that that's a good actionable signal for the daily. Now, you did get that bounce, I guess, here on a print close to 30, and that bounce there. But we haven't got down exactly those levels. We got pretty close. So, my other contention would be possibly you fall back to 34. But I don't play the RSI with this. I use my moving averages, and right now we're not, we're below. The problem is we're below the 50-day, which puts me defensive. I'm not bearish, right? I'm defensive, right? I'm bearish below the 120. We get below the 120, and that's where things get really ugly, right? You just see it throughout the chart here. When you get below the 120, things just turn ugly, and that's just what happens. When you get below the 120, things get ugly. And then over here when it's like, going crossing back and forth on it got ugly right there, lost it, very ugly, and then it's pretty strong above it, right? So strong above it, ugly when it crosses below it. So for me, we are just above that area, so that's fine. As long as we continue to hug that and bounce along it, like right here, no big deal. But we could lose it too, right? We're below the 50 though. The 50, when you have these big strong moves like this, when you get below the 50, that's the early. This is our first warning flag that hey, you drop below the 50-day, you've lost momentum, right? You drop below the 50, you've lost momentum. Let's go to 2017 just for a little history lesson. See how often we drop below the 50 and how long that lasted. All right. So from April. Because over here we dropped below it. This was the very first part of it, right? You drop below it here. So you got below it, and then immediately bounced off the 120 and got back above it, right? So pretty much your indicator was if you got a bounce off the 120, this one was the only false breakdown here in March, where you had a bounce, rejection, and then you got below it. It actually hit the 200 at that point, and then it bounced, okay? All right, so that was the first, hit the 200. This is early in the cycle. We should be extremely late in the cycle, right? If everybody's looking for a parabolic top, we should be looking at what did 2017 do over here in this area. And once the parabolic top really gets going, it barely touched the 50, and then it just kept on rolling, right? We did lose it here, bounce off the 120, never touched the 120 again, regained momentum. You lost it here, bounced off the 120, regained the 50, and then didn't lose momentum. Right, so you kept this momentum. Low, higher low, high, high, and then blast off. Okay? That's not the behavior we see now. What we see now, over here, so look at this really carefully. 1, 2, let's just measure this. From the bounce off of the, and this is kind of more mid-market. Like we should be in theory, right? We're supposed to be over here right now. If we're going to get a peak at the end of the year, we should be no worse than this right here, right? We should be late November, early December price action. We should be over here. Okay. All right. So we had a 13-day period where it took us 13 days to regain the 50-day moving average after a bounce off the 120, and then that was the longest in the late era. Okay, all right, let's go look at this. All right, so we lost the 50 once already here, and that was how long did it take us to regain the 50-day? Is that 13? There's your this is your analog, right? So we had a 40% gain on this one in 13 days to retake. You had a 20% gain in 12 days to retake it. But now, we haven't quite bounced off the 120, but we're getting close. We need to regain the 50-day and then regain it convincingly here in the next few days. We haven't had a really strong bounce. But let me also measure. So, we've got, say, 2 weeks at most. So what does that put us out? 14 days? So yeah, we need to be back above the 50 convincingly by mid-December, which could happen. Okay, but the other thing to keep in mind, I'm going to look at here, is how long were we below the 50? Again, this is, in my opinion, this is not really fair because I'm measuring way back here. This is that September sell-off, right? I'm measuring the September sell-off, not way over here on the right. And we were below the 50 in September for 13 days. So let's just say from the September sell-off to the peak of the bull market, we were under the 50-day for a grand total of 13 days. The entirety of it from the sell-off. Okay. All right. The September sell-off here, we were under the 50-day for 12 days there, but now we've been under it for. Oh, moved that wrong line. I think you guys can just see what I'm highlighting here. It's definitely different price action than what we saw years ago. So from that point when we lost it to today, it's been 14 days. So we've been under it for 14 days after being under it for 12 days. So we've been, going on a month now of time since the September sell-off, we've been under the 50-day moving average. And so, that's just not, that's a loss of momentum. Like here, you never really lost momentum. And if I take the 50-day off of here, you look at the 120, this makes it even more apparent, right? It just bounced, keep going, bounce, keep going, bounce, keep going, right? It just kept bouncing off of that and going. So far, if you look at it from that perspective, we're maybe kind of continuing that trend. So we'll see if that continues. But anyway, so there's a lot of, long story short, I don't trust the RSI as much as I used to because I was using the RSI for the weekly RSI to kind of get a gauge of things. And when the weekly RSI completely broke down from the behavior it had of last time, I just kind of quit using it. That's basically my best answer for you there on the RSI. Plus or minus, but under 30. Okay, so you don't want to go under 30. Yeah. The other thing about RSI is that when you go over 70, the bulls are in control. So people think that's a good sign to sell. It can stay way above it for a long time. It actually means the buyers are in control. And you get below 30, it means the sellers are in control. But those are also good opportunities to look for a reversal too, and you get oversold or overbought. But they can stay sold or overbought. I mean, I would never buy or sell based on RSI rating alone, right? There's got to be all kinds of other. It can be a piece of the data, but not what you're buying and selling on. I would say, but I don't think people do use it as a strategy. It's just not the way I trade. All right. Yeah, we're clearly way behind schedule. I mean, there's just a lot of things different. Other people point to 2013 and everything else, and yeah, maybe we break out and have a big, strong move here. But the volume profile and that tends to tell me we haven't hit that yet. I want to highlight something else here. And just keep in mind what's technically possible. Now, I don't use models. I don't trade with them. I do look at them for fun. I do just consult them just to see if there's an edge somewhere in some of them. But you see how we've had this strong price action. We've been declining. The one model that this is actually tracking pretty closely is Ken Stanfield's KS model, apparently. And I don't know how or where Ken spelled out that he was looking for like a weak price action coming into the year. But that pink line, I'm looking at that going, this is what I'm actually, when I look at the actual charts, just from a pure TA price action perspective, and when I look at all the fundamentals, the declining volume or flat volume, I look at coins kind of stagnating. They were coming off exchange pretty strong. Now they're starting to come on exchange, things like that, right? I see all that put together. I can see a world where we kind of follow more or less that model, that line. Now, I don't know about the rest of it, but, just be mindful of the downside there. He's showing, I guess, something in the 40,000. I think that's totally in play as far as like a downside for the next few months. That would be from a Wyckoff kind of perspective. If we do get this Wyckoff accumulation pattern 2, where basically it's 2 peaks, and then you have some weaker, lower high price action, and then it rolls over. And this is going to be an extended period of time that we're in this price action. And then it rolls over and you hit accumulation. That is, kind of synonymous with what Ken is kind of showing here. Let me go find the Wyckoff pattern too. Now, again, I'm not a Wyckoff trader, so please also understand that. I'm not a Wyckoff expert, nor do I trade this. So I show it more for educational purposes and more for the, if I was to classify it, it's just, I'm kind of in awe / terrified to see these patterns playing out so closely. And I don't know exactly why they play out like this, but it's strong, to me, strong signs of that this market is indeed manipulated. But it's my opinion. I don't have any proof of that per se. But this is what we could be looking at, right? So if I were to flip back and forth between our chart and this pattern, you see this BC here. I'm just going to just BC there. And our secondary test here. Do the C weird, sorry. BC secondary test over here, kind of, sort of. It's not really perfect. UT in phase B, and then you have this. The thing is, this model did break. You see this after the ST, you put in this low. It shouldn't have gone below that low, and we did, right? We shouldn't have dropped below this. Now, because we dropped below this, that could invalidate it. I'm not a Wyckoff expert, so I don't know if this is invalidated. But this was also the COVID scare thing, right? But we did drop below it right before the COVID scare, so I don't know what to make of it. But, you know, this is what, in theory, you know, we could be headed for a weak bounce and then a sell-off back into this range. Again, I don't think the sell-off is going to be this severe, just because the leverage, a lot of conditions don't exist to create that sort of downside. More likely just an extended accumulation here that bores the heck out of people holding crypto and gets people disinterested in Bitcoin, maybe. I don't know. Just thoughts. These are just random thoughts that I have. Now, of course, this could also be reaccumulation, clearly. That's probably, at this point, the more likely of the two. I mean, given this big sell-off, I think some things might be invalidated either way. But we did have, the other thing to keep in mind is we did have this big sell-off and bounce and this other pattern over here that was bigger. So this one had a lower, but didn't put in a lower low than over here. That's right. So I suppose there's a world where what we're actually in is this ST, and this we could be really early on in the pattern as well. We could be like over here in phase A still. I think is the other kind of, we could be transitioning to phase B on this as well. That's the other kind of potential. But I don't, the way that I keep saying in all this is, again, back to my moving averages. Just keep it real simple, straightforward. If we're above that 50-day, then I can be more aggressive with trades and or take trades. As of right now, I'm just going to be hands off. No trades until I get over that red line for me anymore, because I had some good trades over here. I had to eat another stop loss. Let me go fix this real fast. Right, so I ate another stop loss. I need to update my tracking, so I now have 8 stop losses. So there you go. So I've been basically out since over there, other than this little attempt to play this bounce back, because we never hit the 120, so I never bought. I think I did know. I lied. I bought over here coming into the 50, and then we ended up getting out mostly at break even here on this bounce. And then I bought again. I don't remember exactly what we've done, but more or less it's been sideways, but I did eat one stop here. Okay. But at this point, because I ate that stop, I am now, all right, I'm hands off, going back to my old rules of I'm not taking leverage trades unless we convincingly retake this, and then we'll reconsider leverage trading. For me, that's my strategy right now. All right. Yeah. And the thing is, RSI, like with altcoins, RSI doesn't ever work. It just doesn't, it's way overbought or way oversold for a really long time. It just doesn't work. It doesn't give you any real good actionable insight. You have to use, for fib levels, breakout, trend lines, those type of things work really well. And patterns. Patterns work really, really well for altcoins. Patterns work great. But all right, and I think it's because it's a smaller market, so it's more retail players, and so that's what retail players, it's self-fulfilling prophecy most likely. Retail players are playing these patterns and stuff, and that's probably why it works. But I'm gonna take a sip of coffee. Any other questions here before I find something else to talk about? Good to enter Gala now. Well, I haven't been to a gala in a long time. That's gotten, you know, I don't know anything about it. Looking at this chart, let's see what kind of gain we've had. Oh, what are we up? Yeah, you had 800% gain in 11 days. I mean, these, again, I said it earlier, these patterns tend to work out. So I would wait for a pattern break on this, but here's what you're really looking at. Yeah, you're coming into, I mean, if you're in the trade, here's how I play these. If you're in the trade, I stay in the trade until this breakout trend line breaks, right? And you could draw a second one more parabolic, but I don't think it's necessary right here. I think this is probably sufficient for getting you out as close to the top as you're going to get. If you're in a trade, the thing to do would be to watch. If you break down this trend line right here, right now, that you're sitting on, what's going to happen is you're going to break down, you're going to bounce into it, and then you're going to curl over. So at some point when you start this process of bouncing into it and curling over, you're going to have a couple of maybe 4-hour candles where you can kind of pin your, okay, I'm going to go ahead and trim level and then get completely out over here level. And most likely on this one you had fib extension levels of some type. Yeah, so there's, here, let me go to a weekly. Does it even have a weekly chart? Yeah, we can work with this. It's not going to work well because I don't have the full chart, but let's just see what I can do here. It basically started at zero. It basically started at zero. Let's just go up to this peak and down to this. Okay, you're off the chart on the weekly fib extension levels because it basically started at zero. It's not going to do us any good. Let's play this last impulse. All right. Yep. So from this impulse here, this daily impulse, you hit this is where you hit resistance. So if I had been trading this asset, you know, this might have been a consideration for me to look at. But I would have taken profit at the 2 and the 3 and maybe even the 1. But for these really parabolic assets, the best thing to do is just to wait until you hit one of these levels and you kind of confirm it as resistance. And how you're going to confirm it as resistance is it's going to drop below it like it did here. This probably would have been a good spot to trim some right there when you lost the 1618. After having taken it, after hitting the 3618 and then coming back down here. But especially when you get below this trend line, if you bounce back up into that level, that's a good spot to take profit on the way down as you confirm losing that trend line. I'm talking about taking profit, which means that I'm probably saying this is not an entry for me. It's a way overextended, right? I wouldn't be chasing price. But thanks for the question. In theory, you could, this is really risky, super high risk. You could put it super tight. If you have like a good trading platform that's going to honor your order, you could take a stab at buying this support right here. I wouldn't do it. But look at the 4-hour. Yeah, you're just below all this now, so there's not really much to work with. That trend line, when that prints, what'll happen is if this 4-hour candle prints right here, you get a green 4-hour candle here, then you've got a 4-hour support floor to work with. When it comes back into that trend line, into that 4-hour support, you could put a trade on with a super tight stop right below that wick, and it's either a bounce or die trade. So basically it either bounces and gets you another level, or you're out, right, immediately. And those type of trades, like I do like 0.1% risk on those, right? Just throw a little bitty order on, super tight stop loss. It ends up being a reasonable size position, so it's a pretty nice win if it bounces. But if you can get like a super mega tight, order on that, and it's just a 0.1% loss if you lose, those are worth throwing in there occasionally if you're really comfortable with whatever this asset is. I have no idea what it is. What's your base case? We go into reaccumulation phase from here and then move up systematically, rinse and repeat, left top, in line with Willy Woo's view. Eddie, thank you for asking that question. When it comes to base cases, I don't like that term. I don't like having a base case because a base case makes a presupposition about what's going to happen with the market. My base case always is the market is completely unpredictable. I cannot predict the market, neither can you or anybody else, Willy Woo or anybody else. But what I can do is line myself up on the side of probabilities. But those probabilities change by the second, by the minute as we get new information. The best way to determine the probabilities is by price action alone. But there are other ancillary data points that we can help influence our bias if we're at kind of an inflection point and we're not certain about what the chart is telling us. But, you know, it can kind of go either way. But you want to have some external guidance that, yeah, I should be leaning bullish here, I should be leaning bearish here. We can use external information like on-chain data or whatever else, right? With Bitcoin specifically, that might be the case. But with or you know, like with things like Litecoin, if I see certain behaviors of Bitcoin, I know that Litecoin is probably going to be strong, so I'm far more aggressive with Litecoin entries than I would be otherwise, right? Okay. But my base case is the market is completely unpredictable. I do not know what is going to happen, and all I'm going to do is analyze the information I have at any moment in time and line myself up on the side of probabilities. So if I think we're in, like right now, my base case right now is we are between the 50 and the 120-day moving average. That's my base case. We are in an area of uncertainty for me. I don't know what's going to happen next. Based on-chain data, 2 weeks ago, I would have said most likely we're going to bounce off the 50-day and continue up. That's where things looked like, right? At that time, things were very bullish. And so guess what? I tried to buy coming into this support level right through here, right? I attempted some buys, and then we had to get out when we bounced over here and curled over, more or less, right? And now that we're in this area of uncertainty, I don't know what's going to happen. If we get below the 120-day moving average, my base case would be that we are in we've lost momentum and we're headed for some sort of accumulation, and I will position myself accordingly. That means reducing risk. Maybe that means going to some stable coin and some exchanges for a little bit to be able to buy the dip or to weather the storm, whatever it is. If we were to get above the 50, that means that I'm risk on, which means maybe taking out some lightly leveraged trades, for example, or continuing to be fully positioned spot at that point, right? Whatever it is, I will analyze at that moment. I will say, okay, you know, this is a risk on, risk off environment, and I have different levels, right? So I have either, like right now, I'm 100% spot, and this, you look at the broad macro picture, just zoom out, you know, when in doubt, zoom out. We're in an uptrend. The market is still fairly healthy. It's more the expectations that people have that are causing the biggest concern right now. But overall, you know, the broader market is fairly healthy. We're above my main moving average. We're below my early kind of warning moving average, but this doesn't trip me bearish. This trips me to be defensive with trading. This causes me to be defensive with, you know, my overall risk position, you know, basically spot, right? This causes me to be bullish and more aggressive with my entries. So, yeah, I would say my base case is we are in a state of unknown right now. On-chain is looking mixed. There's a lot of mixed factors. There's a new, you know, the broader markets also color my opinion. The DXY is breaking to the upside, right? It reclaimed this. I'm on a weekly in the DXY. It reclaimed this uptrend, right? Had this W pattern put in a big nice move, reclaimed this uptrend. So as far as I'm concerned, the DXY is back in an uptrend, which means risk off, really, for risk off assets. The equities markets have hit some resistance, and they're not really rolling over. They're just consolidating here. That was a pretty wicked red candle, late last week. But otherwise, it's just consolidating. So the equities markets appear to be consolidating. A little period of uncertainty here for the equities markets. That's I don't have a base case other than we're in an area of indecision, and I don't know what's going to happen. I don't try to forward project anything, right? I talk about these models, and I look at these models, and I look at what people are saying might happen, and I, maybe use that information to help color my bias a little bit if I need help, right? If I say, okay, everything's pretty neutral, on-chain's neutral, all these other things I look at are neutral, the chart's pretty neutral, I don't really know. The models might, something like that, like somebody else's base case might help color my opinion that, well, there's a lot of market participants are looking for upside, and they're going to be buying aggressively. So that means there's probably more buyers in the market than there are sellers. That's going to color my bias. But yeah, I don't have a base case. The markets are unpredictable. I line myself up on the side of probabilities. That's my base case. I hope that answered your question, Eddie. But thanks for the question. Good question. ADA. ADA's looking rough. There's a lot of FUD around it. People say ADA's broken. They're wrong. ADA's not broken. Now, I'm largely out of ADA. It's like down to a couple percentage for me, right? So my HODL bag is teeny tiny, so I really don't concern myself with what it's doing. It's safely tucked away in cold storage, collecting staking rewards. So, you know, if it goes to 2 cents, I just really don't care. I've already gotten my profit out of it. But if it starts to want to resume here, I will add some. ADA, from a technology perspective, is not broken. It's just taking some time for people to figure out how they want to build things on it, is what it boils down to. Sunday Swap. When Sunday Swap announces that they go live, I think they're going to be the first DEX. There's a couple of them working, you know, right now to actually go production with their DEX. When the first DEX goes live, and especially when it proves that it's more or less functional, then that's when ADA will turn around. Because the contention right now is ADA smart contracts are broken, this, that, and the other, right? And that's a bunch of hogwash. But you know, that's what market participants are seeing and feeling. And so while there's that fear and uncertainty there, you know, ADA is probably going to continue to bleed until there's confirmation from the market, you know, that sentiment is wrong, and then it'll turn around. We're going to see that, like anything else, we'll see that on the charts unfold. I'm watching all this downtrend structure. On the USD chart, I've got these weekly support levels. I've been waiting to see what level it wants to bounce at. How I'll know, you know, that it's bouncing up these downtrend trend lines. When we get a good, healthy bounce off of one of these, and then some continuation to retake the next one, we're headed back in the right direction. Ultimately, I'm going to get outside this outer downtrend here, but, you know, an aggressive entry might be down here. But at the end of the day, I really am watching this Bitcoin chart more, and this has me concerned that we've dropped below this weekly level that is now going to be resistance. So for me, I'm just waiting until Cardano retakes this weekly level, and then we'll see what kind of patterns, you know, might present themselves then, right? So right now I can sit here and draw downtrend trend lines all day long, but it's just falling, right? It didn't do me any good, because like I could have drawn a downtrend trend line here. I'm like, all right, it broke out. How much helpful was that? It wasn't. It's too steep of a downtrend. All these are way too steep. This did a little bounce here, but then it just faded, right? And so I can continue to draw these downtrends, but they're gonna, you know. A small side note: when you see me draw these trend lines, I don't use the breakout of the actual trend line. What I do is I see what the closest horizontal level is, the significant horizontal level is, and then I start watching for price action around that. So if, for example, we built a floor here and we got above this, but we hit resistance there and came back and retested this would tell me this is the level the market wants to retake. When we retake this level, then I'm back in, right? So I start watching. Okay, yeah, we're right below. We're forming a base under resistance here. This is the resistance I need to watch. Break above that, and we're good to go. All right. But if we were to say break out really strong here, come back to this level, you know, there's multiple ways that I use it. But what I'm looking for is what horizontals. Once it breaks these downtrends, like this right here, this informed me this horizontal. This downtrend right here told me, okay, I was watching this, right? So I started watching this horizontal level, and maybe you got a false signal here, and you had to get stopped out. I didn't take that. I don't think I ever took that signal. I think, well, it didn't really matter, right? I just been watching this the whole time. We never got a convincing bounce. We got this like one big spike, but then it never really showed continuation. So these little spikes like this, we go back to this market activity over here. I'm trying to look at it now. But yeah, you know, this informed me to be watching this level. We lost this level, and so we're continuing to watch where we want to find support at. When was this? Like early November? Yeah. So yeah, ADA right now though, the big thing for me is that we're below this weekly support, you know, this weekly level from way back over here. From, you know, the springtime, we lost that. versus Bitcoin. So I'm not really interested in adding to ADA until we show strength versus Bitcoin. So those are my thoughts on ADA. I do think all the fear about it is nonsense. Not nonsense. I mean, there's some validity to it. It's just overhyped big time. And it'll bounce back. Get that first DEX going live on it. It'll bounce back. ADA is my current accumulation. Yeah, so if you're like a DCA hodler, you know, you could do worse than buying on big dips like this. Just know that there is a world that, you know, so you see this over here, right? This bounce, 2017 bounce, and then the top, and then the next bounce could be this one, and then this one. And it could go back to some pretty desolate numbers. So if you're buying the dip here, you're DCAing into it, just know the floor is like down here somewhere. 30 cents maybe, you know. Maybe it didn't ever go back to like a penny, right? But until it's got live production applications on it, that's probably your floor somewhere down there. This is crypto. It goes both ways very quickly. So, yeah. Let's see what the volume is doing here on Bitcoin. I want to keep a pulse on this. This is not all the exchanges, right? So we have a little more volume coming in here. 11:30 this morning here, last couple of hours. That was on the sell-off. So this would have been the news a couple hours ago that the Fed was looking to taper ahead of time. So that was selling pressure. We've had a little bit of buying coming in here. But in the grand scheme of things, this volume, if I zoom out, 30 days, it's getting to be okay-ish. It's about 6 months here. Look at it by the day. Yeah, today's volume, you know, it's nothing, you know, to write home about yet. But it's getting better. It's getting better. So we'll just see what happens. Litecoin is, like I said, currently my main play right now is Litecoin on all this. If Bitcoin does, you know, let me overlay something real fast for you guys to kind of illustrate why I'm so focused on the Litecoin trade. All right, if Bitcoin puts in a lower high here, this is what Litecoin did last time, right? We had these peaks. You see here, right after this peak, this is just golden, right? So you had this, and this one's a bit of an outlier. We had a one peak here, two peaks there, three peaks there, right? More or less. Basically one peak here, Litecoin had a big reaction. The second peak, Litecoin had a smaller reaction. The third peak, Litecoin had a pretty good reaction on. And if we do roll over here, like a lot like what we did here, right? If we just start to roll over here, you see what Litecoin did, right? Litecoin likes to do this. When Bitcoin's in its dying phases, people are no longer interested in buying Bitcoin as much. It's showing weakness. They're looking for something like Bitcoin, the trade that, you know, so this is what could be in store for a Litecoin move. This is what I want to play, right? So we had this one big move here. Who knows if it's a bigger move just like that? I don't really know. I just know that in theory, if Bitcoin starts to roll over, Litecoin's going to make a big move. Now, on the other flip side, if Bitcoin makes a big leg up like this over here, Litecoin will simply just follow it and lag a little bit. So it's a good hedge. To me, the Litecoin trade is a great hedge because, you know, basically on Litecoin, you look at where we're at. You know, we're like right here on Litecoin, the equivalent of if we do make a big move to the end of the year, something like this, right? So if all this price action is equivalent to something like this, and we do make a big move in Bitcoin, well, Litecoin's just going to tag along and follow, right? And so Litecoin USD will still do well. But if Bitcoin rolls over, then we still get, you know, our last hoorah is Litecoin again. So either Bitcoin's going to roll over and I've got a nice big win in Litecoin trade, or Bitcoin's going to break out and I've got a nice big win in Litecoin trade. That's why I'm so focused on Litecoin. I don't know how I got to that topic, but it's also a barometer, right? Again, if Litecoin pulls one of these stunts, and Ethereum does something like that maybe too even, but especially if Litecoin does one of these stunts where Bitcoin's not yet made a higher high and Litecoin's made a higher high, that is another huge red flag. Thanks, Jay Carey. I appreciate it. Okay, good. Yeah, thanks, Eddie. Have I looked at... Hey, Rocky. Have I looked at Bookmap? Yeah, fluidity. We have to be adaptable. Stay water, my friends. Stay water, my friends. So, Rocky, you said, have I looked at Bookmap? That sounds familiar, but no, I don't think I have. It's a crypto, right? Let's go look at our crypto cap here. Let me find Bookmap. That's a thing. Bookmap. Not a crypto. Okay, I don't know what Bookmap is then. Is it a equity? I don't know what it is. Never even heard of it. Google Bookmap. All right, I'm gonna do this on the other screen because I don't want to. Is it a trading platform? This thing? Oh, the candlestick data. So the volume and buying data. Yeah. I will check it out. I mean, if it's got some good volume indicators and things and heat maps. My only problem with it is it's another data point, and maybe it would be really useful to me if this is a good data aggregator of all the other things I'm looking for. You know, I've got all these sources of information I use, you know, for looking at volume and what's the order book doing. I have a bunch of different places I look at all these different things. If this is a good aggregator, that would be great. If it adds new information, I'm kind of overloaded information as it is. I kind of don't want any more information. As far as charts go, I like having a lot of contextual data in my head, but when I look at a chart, all I want, and my charts are super not pretty because they are purely functional. My charts are 100% function, zero gloss. Right? There's just no gloss with them. I'm all about function. So that's what I want on my charts. I want my charts to be purely functional and simple. All I want is the key levels, and like this, like I don't need, like I know that there's resistance here and there's support here. I don't need that on the chart. I just put that on there for just, you know, demonstrating to other people areas I'm looking at. But, you know, for me, this is all I want on my chart right here. And then these things. Boom. That's all I need. Moving averages, trend lines, and support and resistance. But if all that other data I constantly look at, if it's an aggregator and look at comments. Oh, you can trade from it. It takes 5. Okay, I'll check it out, Rocky. Thanks. Is this a It's gonna make me sign in. Sign up. Yeah, I'll do this later. Maybe I'll do another live stream and check it out. Let's play with it. Any other questions here? It's slow on PC. Yeah, Rocky knows her stuff. Interesting. It's a game changer. Yeah, I'll deal with it. MTV, I love MTV. Yeah, it's a cool one of the coins I'm looking at right now. So I'm started to kind of, and it might be, we might need to be looking at our small caps earlier. So this one's really interesting. I started reading the Innovative Shard Killer Pioneer Flexible Computing Framework. It's an all-dimension sharding solution. This is still a sharded blockchain, but this is like look, it's a hybrid kind of DAG / blockchain. What's what I'm looking for? Sharded / DAG. It's got this like, it's super fascinating. I have no idea if it'll actually work, to be honest with you, but it's all dimensional sharding. This is one of the ones I've been looking at. I've been trying to. So I was out. I didn't get a chance to really dig into it. I've started reading about it when I can. But this is one of the ones, the two I'm really looking at right now. This is like for a really small cap blockchain that can really make some noise is MTV and LF0. There you go. So multivac is a blockchain, right? So it's a standard blockchain, and it's a sharded. It's a multi-dimensional sharded ledger. So it's got this virtual routing and forwarding is what I know this as, but I know they I forget what they call it, what their VRF. But it's a segmentation, right? They've got this segmentation capability to build this kind of like multi-dimensional shard thing. It's pretty cool. ALEF 0 is a directed acyclic graph. But the big thing about ALEF 0, my biggest problem with DAGs, directed acyclic graph projects, AVAX being the biggest one currently, I guess, and you had HBAR, which was a big one for a while. IOTA, HBAR, Nano, and AVAX are like the bigger names in the directed acyclic graph space. They all have some sort of pseudo-centralized mechanism. Well, everybody but AVAX. I think I was late to AVAX. AVAX seems to have cracked the code on how to properly decentralize the DAG component, and it's used to orchestrate actual blockchains underneath it, right? So it's got these partitioned blockchains that it actually orchestrates. So it's, AVAX is quite cool. So I mean, I get why it's been on a tear, but A0 is basically a really small cap, or it's not even live yet, potential up and coming competitor to that, and it's a single chain. It's not really this multi-chain like AVAX is. AVAX is more like a Polkadot. ALEF 0 is kind of like, no, it's not the Cardano. It doesn't have the same name. Maybe kind of like the Elrond of blockchains, right? For the DAG space, right? So has what Elrond did in building the first, adaptive sharding blockchain. ALEF 0 is maybe that. For the directed acyclic graph space. So this is what I'm watching. It hadn't come live yet, so I've got a lot of work to do on this one to get my head wrapped around how some of their mechanisms actually work. But I am pretty impressed with what I've read so far on this project. So these two right here are two big ones I'm watching. And then outside of these two, we've got just an absolute treasure trove of projects that are going live on Polkadot, on AVAX, on Cardano, on Elrond, right? So it's AVAX, Dot, Elrond, and Cardano, and then the layer 2. So things going live on layer 2s for Ethereum, going live on Matic, right? For example, any small project that's building on those major platforms, and even Cosmos. There's a bunch of stuff. There's a bunch that's already been built on Cosmos, but the gems, I think, are going to be largely found in things that are coming live on those bigger platforms. ADA, AVAX, Elrond, and Polkadot for me. That's what I'm looking at. Farm Moonswap. Yeah, MTV is cool. Smart contracts are up. Works on MetaMask. Yeah. So these are all, like, right now, if the bull market continues through early next year, these could be plays for even early next year, right? But they're 2022 plays. If the bull market comes to a unexpected end here, so without a blow off top or whatever else, right? If we just kind of like fizzle out in the 60s and 70s or whatever happens, then yes, these are bear market things to pick up in the bear market. But if like Michael Fairfree Digital, his block-based timing, or Ken Stanfield's model, so these two models here. This is block-based. This is Michael's blocks-based work here, kind of maybe the root, potential peak in March. If we had this sort of like, price started really resuming early 2022, these are projects that might do well then, especially if it goes all the way out to like May for a peak. But for the most part, yeah, these are really things we're going to be researching for the bear market to pick up in the bear market for sure. All right, Algorand. Yeah, I'm not like Algo. The problem with next generation, so Algorand is a interesting layer 1 blockchain in that it's extremely fast, but it's extremely fast for transactions. The smart contract finality and transactions per second on smart contracts is not great, right? The way it's fundamentally built, unless they're probably working on updating that. I need to probably see what they've been working on lately. But last I checked, what really matters nowadays, like how fast you can move coins from one wallet to another, that's all figured out. Like you can do that. There's a bunch of ways. There's a bunch of mechanisms with either layer 2 like the Lightning Network, or different scaling solutions, or just really fast blockchains like Algorand. That's all figured out. What matters now is smart contract finality. How fast when you execute a smart contract, how fast the network finalizes those transactions that were a part of that smart contract execution. So smart contract execution speed, and then transaction settlement finality, and then how many of those you can do per second. How many smart contract executions can you do per second? Those are what really matter, and Algorand just doesn't compete, right? So compared to Avalanche or Elrond or Cardano with Hydra, Algorand is just not competitive. So that's the only problem there. All right. So I'm not really excited about it. And Polkadot's a big name. Their smart contract finality isn't the greatest either, but they've got different ways to scale that to the whole WASM module and stuff. But yeah, that's that. All right. Guys, I'm going to wrap up here. This has been a good session, I think. I hope you guys got a good feel. I think it's kind of clear that price isn't going to do what a lot of us were hoping for by the end of the year, but that's okay. We're going to take it one day at a time and play with the market, gives us. So, anyway, keep it simple. Keep it simple. Above the 50, good. Below the 120, bad. In between, shrug. Play Litecoin. In between, play Litecoin. All right. Talk to you guys later. Take care.